Good morning, everybody. Hey, welcome to Monday, February 24th. Thanks for joining us today as we head into the last week of February 2020. Hey, it is definitely a red day today as we get ready to go. Let me just kind of share my screen, give you an idea. You see a lot of red. Not as bad as it was first thing this morning, but still a lot of red. So, hey, hang tight. Dave and I will have that discussion here in a few minutes. If you don't have an exit strategy, if you don't know when your broker is going to get you out of the market, that should be concerning to you. Give us a call. Let us go through our financial x-ray to find out how much risk you really have in your current portfolio. Give us a call right now at 863-382-0037. Hey, hang tight. We'll start the conversation here in just a moment.
There's one genie in the bottle. We just as soon have kept it in the bottle because, boy, is it screwing up finances this morning. Hello, 105.7 Light FM. We're at 8:38, 22 here before 9. And talking about genies in a bottle, we kind of wish China had managed to keep a virus in the bottle like that lamb in Wuhan. Let's go down and check out your finances. Statler Financial Services, Phillip Statler standing by. Yeah, we could have kept that particular genie in the bottle over in China, couldn't we, Phillip?
Yeah, that would have been nice, Dave, because that is definitely what we see today is driving the marketplace is the whole coronavirus.
Oh, absolutely. News over the weekend, just to give everybody an update. Substantial outbreak of the coronavirus over in Italy. Even Iran admits that they've got some coronavirus cases going on, and the dirty word from the World Health Organization is being used. They haven't declared it that, but they're saying it's bordering on it. Pandemic, and that's going to scare the crud out of world markets when they use that word, doesn't it?
Exactly right. That's one of those words that just automatically will drive major uncertainty into the markets. If you can't already really see that today. I mean, it's right there.
Oh yeah, that's more than uncertainty. I had a tenant. I couldn't resist looking after looking at the news that it was in Italy, and the Italian markets this morning, midway through their trading day, are down more than 5%, and that's nothing compared to the Greek markets. Well, they're kind of on touchy ground to begin with over in Greece. We've talked about all their financial troubles in that nation. Greece markets are down by over 7% today, midway through their day. Now, we're selling off like chiclets, but compared to that, we're actually doing pretty well, aren't we?
Yeah, we are. I mean, that's moderately speaking, right? I mean, that's if you look at where we are, we're in better shape than they are, but we are still seeing and printing a lot of red ink right now.
Oh boy, we're down like 2.5% plus on the futures, and the trend has not shown any great change, and we got absolutely no news to speak of to start our morning out to be able to change anybody's minds as far as domestic markets. About the only thing I'm seeing of any great note, and you and I were comparing notes on the pre-market trading. One of the companies that thinks they might be on the trail of a virus for the coronavirus, a vaccine for the coronavirus, is trading up like crazy. But beyond that, I mean, we're pretty much selling everything that moves this morning, aren't we?
Yeah, we are. So that's Gilead Science. We talked about it a couple of weeks ago. They had teamed up with I think the Chinese government actually to help develop a vaccine for this virus. And so they're obviously the bigger this pandemic gets, or the closer we get to quote pandemic, the more they're going to reap a benefit when it's finally the vaccine's finally found out about. You mentioned another one to me that you saw was having a good day today. I think it was Newmont Mining, wasn't it?
Yeah. Newmont was also showing a big up this morning, and I didn't know why.
Well, gold's heading up like crazy this morning as another safety net. Like the bonds are going down in value, yield. The gold is becoming up in price, and so because of that, we'll see some of the mining stocks actually probably benefit from that.
Okay, that would explain it. Yeah, I do look, and gold is pointing up considerably this morning. When we get down to the commodities, folks will see that. Kind of interesting looking at the overseas markets. Yes, Europe is selling off like chiclets. The Asian rim markets are reacting kind of conservatively to that, and I'm suspecting it's because Well, heavens, they've already sold just about everything that moves over there as it is. The Chinese markets are down by 1.5% or so at the close. It really wasn't all that big a thing over there, but like I said, they pretty much sold off already, and they've already kind of hit bottom, haven't they?
Yeah, well, bottom may be a loose term today, Dave. I'm
Yeah.
sure there's still further they can go, but they have obviously, because that's where the coronavirus started in that area and it's expanded to all the Asia realm. They've dealt with it a little bit quicker and sooner than we have in our markets.
And the Chinese government is starting to get under some pressure on this thing, too. President Xi has been kind of walking around the issue, and they haven't really said in so many words that lab in Wuhan that they're pretty sure that the virus emanated from. Uh, some of the reports I'm hearing is that plant specializes in biological weaponry. Uh, if they can't keep the bugs in the test tubes, that may very well make the government in some trouble as well over in China. They may be a command and control economy, but nobody's 100% secure over there.
Well, that's true. And if that is the case, then you have to be concerned on a worldwide basis of, what happens next time. And, how fast can we get a vaccine to this thing? Because if that was part of their developmental process in that warfare part, then that's going to give a lot of people some uncomfortable feelings.
You're speaking in very mild terms, uncomfortable feeling. I'm thinking world panic, and we seem to be looking at that this morning. We were down by over 227 points on the Dow on Friday, and we're not looking any better this morning. The big difference this morning is that we're also looking at major flights to safety. You mentioned gold, which stereotypically is a safe harbor for investors. Bonds also indicating it. We talked about setting a new record for low interest rates on 30-year Treasury bills back on Friday. We managed to knock more off of it. 30-year bonds are down by 12 basis points this morning. 10-year bonds are down by more than 12 basis points this morning. The smart money in those hedge funds where they can move gobs around in a hurry, they're really heading someplace where they can get nothing for a few days, aren't they?
Yeah, they really are, man. I'm looking at the 30-year down below 1.85%. It's actually 1.849. So, I can't remember ever having 30 years treasuries that low. I'm looking at the 10-year, down below 1.4%. So we're just seeing some drastic measures when it comes to interest rates right now. Man, it'd be a great time to refinance a pile of government debt, right? The deficit right now at that 1.85%, we might be in good shape then for a little while.
Offhand, you're right. Yeah, I look at 1.85% until a few months ago. 1.85% would have been one of those things we'd be shaking our head at the 10-year bonds getting down that low, wouldn't we?
Yeah, exactly. I mean, it's not unusual to see the 10-year, and man, it wasn't that long ago that it was up around that level and even a little higher.
As a matter of fact, we weren't trying to, but we were kind of sounding a little bit of a panic horn when the 10-year went below 1.85, and now we're looking at the 30-year down to
30-year.
that.
Yeah,
It's
unreal.
amazing. Oh, absolutely. Is there anything that's likely to change us on the domestic front this week that can give us any sense of optimism? Because I don't see a lot on the calendar coming up this week news-wise either.
Well, we do have some big events on Thursday, right? We have the second estimate for GDP comes out on Thursday, and so I think that could be important, as well as imports exports comes out on Thursday. So Thursday might be a pretty big day from an economic standpoint on what happened last quarter.
Assume for good news, improve our humor by a little bit, because there's not a lot of good humor on Wall Street this morning, is there?
No, there's really not. And this could be, you and I have talked a while now about how we're definitely overdue for a correction and for that matter, a bear market. And this could be the kind of the thing that starts that 10% correction.
Understood. Yeah, the conventional wisdom is that you expect a 10% correction on average once a year. 5% corrections are supposed to happen at least a couple, 3 times each year. At these high numbers on the Dow and on the S&P, those are much more catastrophic sounding numbers than they would be routinely. So maybe we're looking at them a bit more conservatively, but even a conservative estimate would be that we're overdue for one of those 10% because we haven't had one now for well over a year.
Yeah, that's exactly right. I've seen a few little headlines. I haven't really looked at the numbers to see if they're right or not, but that like the Nasdaq and tech companies are already pretty close to being in a bear market.
Wow.
Yeah.
We're pretty darn, looking at the numbers as the way they're going down this morning, they could be. Set the table for the morning. The news is all coronavirus, coronavirus, coronavirus. I mean, coast to coast, border to border, and across the world. Friday, we knew something bad was going on and traded downward on the Dow by 227.5 points. NASDAQ was down by 174.3. That was 1.79% on Friday alone for the NASDAQ. Standard & Poor's was down by over a full percent, down 35. We're about 45 minutes before we throw some real money around this morning, and I suspect the money is all going into sell orders looking at these numbers, Phillip.
Well, there's definitely a lot of it going into sell. We've got the Dow down 2.8%. That's 811 points. We've got the S&P 500 down 2.7%, which is about 90 points. And then we've got the NASDAQ down almost 3% this morning. That's 281 points. So we are definitely seeing a decline in the marketplace. And with that, we are getting some ups from silver and gold, right? We got silver up 0.75% to $18.67 an ounce, and we got gold up 1.75% to $1,677 an ounce, and then we got crude, a substantial downtick today, down over 4% to $51.19 a barrel.
And actually, that's for the reason we don't want to see it go down, the anticipation of reduced demand.
Exactly, that's true.
Can't win for losing sometime. Asian markets all were down, but not as bad as European and American markets were at the close early this morning. Hong Kong down by 1.7%. The Japanese only traded down by 0.33%. Got to mention those bond numbers again. 30-year Treasury bills are down by, well, now I'm looking at 13 basis points down to 1.84%. And the 10-year down to 1.39%. That's a full 13 basis points down there as well. Phillip, this is a weird time, and if you're within 10 years of retirement, you got to be getting a little nervous. Time for some advice. How do I find you to set up that appointment?
Absolutely, Dave. Now is a great time to have a financial x-ray to make sure you don't have too much risk in your current portfolio. To do that, give us a call at 863-382-0037. And let's look to see what kind of risk you have in your portfolio. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on your sister station, News Talk, 7:30 a.m.
And back again tomorrow morning with the health report, right?
Hey, it seems to be that's what we're looking at these days.
We're all becoming epidemiologists in our spare time. Phillip, thank you so much. We'll catch you tomorrow.
All right, man. You have a great day. I look forward to it.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, remember, if you're not sure how much risk you have in your current portfolio, give us a call. Hey, let's don't procrastinate any longer. Give us a call, 863-382-0037. Let me show you just kind of as we leave today, what we're looking at this morning. Before we get going today, you can see here that we're down anywhere from the high over 2.5% to 3% this morning. So, hey gang, hang tight, give us a call. Let's find out how much risk you have in your current portfolio. Do it right now. I'll talk to you again tomorrow.